Good afternoon, everybody, or good evening. My name is David Matney, and welcome to tonight's program. And looks like we already got somebody in the chat. So I see Bob Handy is in the chat. So terrific. I'm excited about tonight's program because tonight we're going to talk all things appraisals. So it's going to be a great opportunity to learn about the appraisal process. And I have a subject matter expert for that this evening. My guest tonight is Nate Wohlenhaus with Wohlenhaus Appraisal Service. So I'm going to bring Nate on board and we're going to talk all things appraisal. So, hey, Nate, welcome to the program.
Thanks for having me, David.
All
Glad to be here.
right. Terrific. Well, hey, Nate, thanks again for being on the show. And then what we're going to do is I just got some series of questions and we got some folks in the chat. So we're just going to kind of talk all things appraisal. So, but
Great.
before we dive into things, tell us a little bit about your background, how you got started in the appraisal business, and how long you've been doing it, and that sort of thing.
Well, my dad is an appraiser, Fred. So
Okay.
that's how I really got in the business. He's been appraising since the 90s.
Is that right?
Still
Wow.
going strong too.
Is that
So
right?
we've been in the Omaha area now for over 20 years.
Wow.
I got my first credential in 2021 or
Oh,
2001, sorry.
gotcha. Wow.
Yeah,
Okay.
so it's been a while. But, my I graduated from UNO,
Mhm.
and my degree's in accounting, so I was in public accounting for a few years after
Okay.
college,
Yep.
but transitioned into appraising.
Right.
Been working with dad ever since.
Well, and that's it's being an accountant is high analytical, and being an appraiser is a high analytical thing. So
Mhm.
that probably fits right in. It looks like we already got some folks in the chat. Bob has Bob Handy 91, and then curious about expanding appraisals. Okay, so we'll cover that in a little bit, but also we got Clark, and Clark is a regular on the show. Clark says, "Welcome, Nate." All right,
Hi, Clark.
terrific.
Hi, Bob.
All right, excellent. Well, hey, Nate, tell us what exactly is an appraisal.
So basically, an appraisal is, a valuation of the real property. So the land and improvements, and banks and mortgage companies hire us residential appraisers to value the underlying collateral of for the loan.
Gotcha. Okay, and so is why is it required during the home buying process?
So a majority of your typical mortgage transaction is sold. Those loans are sold to Fannie Mae, Freddie Mac,
Hmm.
and Fannie and Freddie require an appraisal for
Okay.
most transactions. Now, they require a valuation for all transactions, but there
Hmm.
are certain um, loan to value ratios, certain properties that qualify for value acceptance, which
Okay.
is basically the new term for an appraisal waiver. But
Okay.
and those loans that aren't sold to Fannie and Freddie or another secondary lender per se, if it's say a bank that's uh, federally regulated. So
Hmm.
if they have any sort of real estate transaction that they do, they're required to have an appraisal done. That's regulation by FDIC, NCUA, those sorts of things. So there are
Gotcha.
de minimis levels on that too, that they can do an in-house valuation, but the majority of real estate transactions
Hmm.
are required to have an appraisal.
Okay. And what are some other uses for an appraisal? Why would someone else want to do an appraisal besides a real estate transaction? Share with us some of the other reasons why somebody would want to do an appraisal.
Uh, Many reasons. The general public um, a lot of times gets an appraisal. We do property tax protests.
Okay.
So if someone gets their property tax statement and it's gone up significantly and they want to fight that, the best way to do that is with an appraisal.
Right.
You can take that into the referee and show them, hey, this is, what it is, and they don't really argue with that, you know.
Right.
So not saying that you don't have to do that every year because typically they might raise that every year, right? So,
That's one case where you wouldn't want the appraisal to be high.
oh, right, right.
Yeah.
You know, a lot of times we do divorce work
Okay.
where each party will get their own appraisal, dissolution, that sort of thing. Estate work, there's quite a bit of estate work out there
Right.
where, the IRS requires, you know, uh, an appraisal, just set basis, that sort of thing. So those are just kind of three of the reasons, but
Okay.
you can kind of get one if you really want to see what your property's worth. If if you're looking to sell it or just keep it or whatever.
There's one other reason, Nate, that a person would do an appraisal, and that would be for a YouTube channel. I thought,
That's right.
I thought it would be a really good idea to um, get two appraisals for one property.
Oh
Okay.
my, yeah.
And see what the difference was. And the only person that enjoyed that video was me.
Oh,
I spent the money for the appraisal. I thought it was a pretty cool idea, but
yeah.
apparently YouTube didn't think so because it didn't. You know, I thought, it's probably my most expensive video.
Yeah,
And I had the permission of the seller to do this and all. And, I told her what I was doing, and it was kind of an unusual property. But hey,
sure.
we got uh, Jackie Baker. All right, Jackie Baker's in the house. All right, Jackie, welcome aboard. All right, and then James is in there. James Clark is here. All right, terrific. All right, okay. All right, looks like we got Jackie. All right, Jackie has a great channel. She's closing in on 100,000 subs. So I met
Wow.
Jackie several years ago, and she produces some great content. So does Clark. So that's great. Nate, what does an appraiser look at during to determine a home's value?
Well, the biggest, is always location,
Yeah.
right? Barring location, there's a lot of different factors that go into valuation. Overall square footage, room count, amenities like pool, sprinkler systems, fences. There's also quality, um, condition ratings, that sort of thing, improvements. All
Okay.
of those factors are taken into account. Market trends, uh,
Okay.
whether going up or going down, that sort of thing. We look at whether there's, you know, um, zoning issues or um, whether it backs to major roadways or power lines or railroad tracks. That's
Yeah.
all of those factors go into determining value.
Now, what kind of a ding would you say some of those major negatives would play a part, or can you say, I don't know if you can, if this is there a certain amount that you can say, hey, that's going to ding if it backs to a busy street or power lines? Is there a certain amount that you would say it just like, hey, it's going to take a 5% hit or a 10% hit for something like that? Is there any kind of
There's not really a rule of thumb.
okay,
Unfortunately, I wish there was.
right,
But basically, you just have to look at the overall comparable sales in the neighborhood and kind of do a paired sales analysis, which is
gotcha,
easier. Theoretically, it's easy. You take two houses and the one that doesn't back to the road, hopefully, you drill it down and you've got your adjustment. But
right.
there's a lot of other factors that go into that. So sometimes, you just got to make the best case determination based on other factors. So
Right, it's an opinion of value, right? It's
right.
it's an opinion. Okay, Bob here has a let's. Bob says I was looking at a house near Old Town Bellevue that was over $300,000. When I asked the realtor how they came to the price, they indicated the appraiser had to expand the radius for comparison. Any
Okay,
thought process on that?
so if we're in an area that, say, you have a more unique property,
Okay.
and I know Old Town Bellevue has a lot of homes that are smaller. They were
Hmm.
you know post-war, you know 700 square feet to 900,000 square foot houses. If you have something
Yeah.
way out of out of bounds, as far as square footage goes,
Hmm.
or large garages, that sort of thing. You can expand um, to find comparables. Say, go to a different area that is comparable.
Right.
So a
Okay.
competing neighborhood, it's called, and you just kind of keep going until you find something that's, and maybe it's not in a competing area, maybe it's in a, an area that has higher value homes. You can make an adjustment for that
Okay.
based on the location.
Gotcha. Okay. Okay. And then Bob says, as a buyer, how do I know the appraisal was fair based on other homes that were over a mile away?
Sure. You know, we try to stay within the competing area. So
Okay.
if, whether that's a subdivision, whether that's a neighborhood or a town, a
Hmm.
lot of times you'll go in the metro, it's easier to stay within that mile radius or even within a
Hmm.
subdivision.
Right.
You get out into more rural areas in greater Nebraska, or, and you're in a little town the size of, say, Dodge, Nebraska, where
Right.
there's not a ton of sales, or, you have to basically go to competing market areas that are sometimes,
Okay.
15, 20, 30 miles away to find,
Wow.
sales that are similar. And you can explain that, local economies in those counties are typically similar, but if
Okay.
they're not, you can make adjustments for that based on whether they're closer to the metro areas, whether they're, there's larger manufacturing in those that
Right.
draw people in, you know.
That just seems really tricky to
It is.
yeah,
It's a lot of research time.
I
Absolutely.
I bet. I bet. Okay. Um, James says, when appraising in the Midwest, does the uncertainty of the weather affect the price? Good question.
Um, Not typically.
Okay.
Everybody here kind of battles with the same issue. Every 5 years you're gonna have to replace your roof because it's gonna get hailed on whether you just
Right.
replaced it or not, right? So you kinda that's just part of the deal.
Yeah,
Um,
that's baked into the cake. Yep. Yep. Okay.
we don't have a huge, you know, uh there are lake developments, I should say, and typically in resort style towns, those lake developments are very dependent on weather. So, say you go to
Gotcha.
Okoboji and those
Okay.
houses will be, higher priced during
Yeah.
certain season. That
Okay.
we don't typically get that here.
Okay.
People buy lake houses typically to live in. They don't buy them as second and third homes usually. That
Right.
does happen, but that would make the price go up and down more so than people just buying them to live in.
Gotcha. Okay. All right. Clark has a question here. If you see that the market has been trending down in a certain subdivision, do you deduct or adjust the price down due to that?
Sure, we adjust for market conditions, whether it's going down or up. Um, those can be a little bit tricky because
Okay.
it's based solely on statistics, right?
Hmm.
And the more properties we have in a certain area that are comparable, um, the better the adjustment parameters can be. Um,
Okay.
it's hard to look at a subdivision that has just a handful of sales and then try to extrapolate a market adjustment on that. You know,
Right.
we like to, in statistics, the more the merrier. So
Right.
we like to see, several hundred sales within a market area to kind of
Okay.
find where that price point is going to land. And we're now required through Fannie Mae to make
Uh-huh.
market conditions adjustments based on um, monthly from month to month.
Oh,
And
really?
so we have
Okay.
to justify those, which our MLS system is a great tool. We can plug in
Right.
a lot of parameters and can spit out a bar chart that shows you month to month movement, right?
Right. Oh,
In a
yeah.
in a certain zip code or whatever.
Yeah.
And so, but those are difficult to find or to extrapolate from a smaller market.
Right.
So, um, you know, I guess we start with the overall trend. in the
Okay.
Omaha metro and kind of see where that's going. And then you look at different segments of the market, whether it's high-end homes or first-time home buyer type price range or
Mhm.
somewhere in between. And then, each of those markets is different.
Okay.
So,
Okay, good. Now, before we jumped on the call or jumped online or live here, um, talk about share your experience during COVID and how that market, what it was like when things were appreciating so fast. Talk about the challenges of appraising during that time, because that was something that was just, you know, um, for you guys, that had to be really, really tough.
it was difficult. Volatile markets are hard just because, like I said before, it's hard to come up with market conditions adjustments based on a rapidly rising market. And interest rates were so low, and people
Right.
were sitting at home. They were bored, so they were moving or refinancing. And uh, we'd have instances where a house would sell, and a few months later, it would sell again for a higher price.
I,
And and then you throw in escalation clauses, and
right,
you would see houses going 30, 40, 50,000 over asking, which is not normal. That is not
right.
a
That
historical
is
thing.
not,
I mean,
yeah,
been doing this over 20 years, and this is probably the first time I've ever seen escalation clauses, which is crazy. And
right.
so that really made things difficult. And there was some of the uh, standards were relaxed as
Hmm.
far as whether we got to go in the properties or whether we could
Okay,
rely on MLS photos, that sort of thing, and
okay.
measurements. And so there was a lot of that. And,
Wow.
you know, uh, so kind of the information was we would sit here and look at the information online and kind of come up with a whole thing. It was the wild, wild west a little bit.
I, yeah, I remember. I was like, yeah, it was amazing. Now my friend Jackie, she's in New Jersey, and
Mhm.
she's still seeing in that market um, homes sell for over $100,000 in the New Jersey market. But
Wow.
yeah, so I mean that's Clark has a question here. How many comps do you typically use when putting together an appraisal?
So my final report when I turn in to the lender, I have at least 4 or 5.
Gotcha.
Sometimes 6,
Okay.
and I try to put a few listings or pendings in there.
Mhm.
So basically, sold comps, I try to get 4 in there at a minimum.
Okay. Good. And then Jackie has another question here. How long does it typically take to complete the appraisal report? That's a great question.
Yeah, I guess if I had to average it out, I would say probably with all the research time
Hmm.
and setting it up and everything, it's probably 4 to 5 hours for a typical house. So,
Okay.
I guess that would probably include drive time and inspection time. But so I would say 3 to 4 hours, putting together on a normal, non-complex home. Now, the complexity makes those
Right.
hours go up pretty
Okay.
significantly.
I have a question here. What's the one thing you wish agents knew, or maybe the public knew about the appraisal process? What could we do better as agents to make the process better on from your vantage point? Because I'm sure you see a lot of things. I have my thought process on this, but I would like to hear your take on it.
Sure. Typically, I find agents are really educated on the appraisal process, as far as what we look for the most part. I would say, the biggest questions I get from the general public
Mhm.
are their biggest gripes is square footage. You
Okay.
know, we split it out because the Fannie Mae form we use, the 1004, splits it out. Gross living area, which is everything above the basement,
Okay.
and then the basement overall square footage, and then finish is separated on the report. So a lot of times those are jammed together, and so we get, hey, you misrepresented it. You didn't measure my house properly. That's what that's what I did. And then you explain it. This is how, it's broken out this way because it's a national form and some
Right.
areas don't have basements, some do. So, that's just how that goes. And then we measure typically differently than the county. A lot
Okay.
of people look at the county website and
Hmm.
they find their overall square footage, right?
Right.
We have to use ANSI measurement standards, which can be different, especially in older homes with, say, a that's a 1.5 story.
Yep.
Um, if the ceiling height's not 7 foot, if the
Okay.
if the overall 7 foot ceiling height doesn't cover at least 50% of, we can't count that in gross living area. That's adjusted
Okay.
for separately. So, stairways are counted differently in
Right.
ANSI measurements, that sort of thing. And I think, and that's a pretty recent development by Fannie Mae. And I think in time, uh, MLS systems and county websites, assessors will catch up to that.
Gotcha. Okay. One thing I'll always, uh, whenever appraiser calls me, I'm very nice. I was taught very
Hmm.
early on to be very nice to that appraiser.
We appreciate that. We
And then
really,
to always call them back, you know what I mean?
yeah,
Because I know you guys will call about a pending and say, hey,
sure.
because you guys are trying to accumulate your data and everything. So I was
Right.
taught early on. I don't
I,
know.
yeah, one of the big things that we have to hunt for all the time is seller concessions.
Yes,
And if those are posted on the MLS, it's just great.
I know. And
A lot of
if I
times
could
not.
if I could live in the world of rainbows, sunshine, and
Yeah,
lollipops, it would make it makes the market analysis easier when
right,
you go to, because if you, hey, that sold for $300,000, but there was a $5,000 concession.
right.
That's important to know. And
Absolutely.
I'm in the same boat. I don't know. I wish that was the case where that was, I mean, it's on the form. It only helps, you know, the market and everything.
Right.
Yeah. Okay. James has another question. Due to the tariffs, would appraisals go up or down because contractors are paying higher prices on wood? What's your thought process on that?
You know, I don't think it's tariff specific, but
Hmm.
even during COVID, we saw this where we had issues with supply chain,
Gotcha.
and the price of lumber went way up and then it
Right.
came back down. You know, um, there was just instances where, garage doors for,
Yep, I remember those.
I mean, you'd see a block of new constructions and they were just plywood doors. There was no, because they couldn't get them, right?
Right. And there was a stove thing. There was a stove. I remember the garage door thing was like, hey, we ran out
Right.
of garage doors. Yeah.
Yeah, appliances, right? They were
Yeah.
waiting months and months on appliances. Now,
Exactly. All
that
right.
it does affect, those prices do because, the contract prices for those new constructions, those increases are built in. A
Hmm.
lot of contractors were putting escalation clauses for materials in their contracts, right?
Right.
So, it made it difficult. Now we could explain it away.
Hmm.
Obviously, if you came in at a certain price, you locked it in, and then you were months later getting ready to close and, there was change orders, that sort of thing, or price increases, that makes that price of the house go up. We look at historic sales in a neighborhood when we value those houses initially, but
Hmm.
also we have to go back and do a final when we're done too. So if those prices do increase, typically we can find comps that will justify that price increase.
Okay. Okay. Clark has a question here. What happens if a person builds an addition to their house but doesn't permit it? And when a new person buys it, the seller is adding on to it, even though it wasn't permitted. Do you add that?
You know, that's a great question. And we've had this over the years where if you can tell, it's kind of one of those things where it doesn't look like it was done professionally, so to speak, I guess I should
Right.
say. Uh, you can search for permits.
Yep.
If it's not done, I mean, if it's done in a workmanlike manner, so to speak,
Okay.
and
Okay.
it's similar to the rest of the house. We're not the permit police. We don't turn
Right.
people in,
Okay.
but you know, uh, but you can tell pretty quickly if
You
an
can
addition
tell.
has HVAC,
Right.
the electricals there or not. Right now, if you get into a situation, and I've had this before, whether you get into an addition of a house, but they
Hmm.
put it over a deck, right? So there's no
Okay.
permanent foundation, and they're
Yep.
calling it gross living area. That's
Okay.
not square footage. That's just,
Gotcha.
unfortunately, through the new ANSI standards, that's just a finished deck essentially. So it'd be
Okay.
adjusted for differently and wouldn't be gross living
Gotcha.
area.
Okay. Okay. And then Fernando has a question. Getting an independent appraisal report be used be used to counter property taxes.
Absolutely.
Yep.
Yep. That's a biggie. Um, a lot of people try to go in and argue taxes, their tax assessment with, some stuff they pulled from the neighborhood, which is fine. But
Right.
a lot of times those referees are professional appraisers. And if
Right.
you walk in with a professional appraisal done,
Right.
it's just going to make your life a whole lot easier.
Exactly. Exactly. Okay. Jackie has another question here. Uh, Here in New Jersey, when the appraisal happens, the buyer's agents will bring comps to the appraiser. Some appraisers appreciate it and some don't. What's your thought process on that? Because I've heard that being done here as well.
I always appreciate when I get a packet from the agent.
Okay.
I get a lot of those, and I really, the more information I can gather, the better, because it helps me look into what the process is that you went through to value the house, to come up
Gotcha.
with the listing price. And
Okay.
so, if I can, a lot of times those comps are the same ones I would pull too. So,
Okay.
it's really great, I think, to see whether it's not just the comparables that you used on your BPO or your CMA, but also
Hmm.
lists of improvements that aren't
Right.
necessarily readily seen, you know,
Gotcha.
that sort of thing. Those are immensely helpful.
Because I've had my sellers, prepare a list of improvements,
Mhm.
on the attached documents, so it's readily available and things like
Right.
that. But you guys look at that as well.
Absolutely.
Okay. Terrific. Terrific. Okay. Excellent. All right. And then um, let's see. What happens if a home doesn't appraise for purchase price?
I usually get a phone call or three. Those are unpleasant.
Right. Yeah.
Those are very unpleasant, but
They
that's
are.
just part of the deal. So,
Right.
it's rare. It's anymore. It
Hmm.
happened more so, I would say, in COVID.
Okay.
Um, but there's basically, I think, two segments of the market that you see where appraisals don't necessarily come in, or they come in low, right? That's kind of
Hmm.
the thing.
Yep.
Um, those first time home buyer type price range, where there's escalation clauses. Those are very difficult sometimes. We talked about that. But,
Right.
if you look at the overall appraisal industry and how it was set up back
Hmm.
in the day, and just through regulation and that sort of thing,
Right.
it's basically, um, it's very conservative by nature, because we
Yep.
look back in history to value
Right.
homes based on closed sales, right? And
Exactly.
and so, uh, that makes it a little more difficult in a volatile market where things are
Hmm.
going up rapidly. It also happens in a declining market too, so we have to be careful about that, not to overvalue properties. No one ever
Right.
complains about that. Uh, and another one is, high-end construction, where,
Right.
cost doesn't necessarily always equal value, and we
Hmm.
see where very high-end homes that are extremely customized are very large, and there's zero comparables
Right.
where you have like a 3, 4, $5 million home. In some areas of the country, that's not a big deal, but here it's a big deal, right?
Right. 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 Right.
Don't have those sell very often. People build
Right.
those and then keep them forever, you know.
Yep. Yep.
But getting a construction loan on those, we have to do a bank does an appraisal, and you know, finding comparables for really unique high end homes is very difficult. But if an appraisal does come in, lower than the purchase price.
Hmm.
There is a mechanism for that. Most lenders have, it's called a reconsideration of value. So
Okay.
you get with your agent, you find comparable sales that you think are better, and then
Okay.
you send those through the lender, and they get back to the appraiser, and then we kind of look through those and analyze those to see, hey, did we miss something? Are these close? That sort of thing. And then there's a bit of a reconciliation process where we go back and forth with the lender and say, hey, these comps
Right.
aren't comparable because of X, Y, and Z, or they're I missed it and I'll put it in there. And sure, it does affect the value.
Right. Now, let me ask you this. There's been there's been a lot of rule changes and everything with the MLSs and things like that.
Hmm.
And there's a lot of talk out there of off market listings or, office exclusive listings. Um, do you see, you know, very much of that, or have you seen a rise in that since do you see more of it now, or kind of what's your, from your vantage point, if another company has an office exclusive, I'm not
Hmm.
aware of it,
Right,
so it'll sell without being advertised on the MLS, and you guys see it because you're going to do the appraisal for it. Does
right.
that, do you see what's your thought process on that, or do you see what's your opinion on that, or do you have an opinion on that?
Don't see a ton of that. I guess we're
Okay.
not, it's not a, I guess it's not a huge deal because again, we look at a whole bunch of sales. So if it sells and it's not necessarily on an MLS system, we can pull it from the county record. Now, those are a little harder to verify. We kind of have to track down the seller or the
Okay.
buyer and maybe the agent involved in the deal.
Hmm.
So those are a little more difficult to analyze, but
Right.
don't see a ton of that, honestly.
Gotcha. Okay. Okay. And then let's see here. Clark has, how do you account for renovations or upgrades to a house? Does renovating a kitchen make sense, and so on? Great question.
It is, and I would say it all depends.
Okay.
There are upgrades can enhance the value of your property. They can also be a detriment.
Yeah.
And it all depends on location and price point, honestly. So,
Okay.
we've gone into houses that are, say in that first time home buyer range, and someone will throw in a $75,000 kitchen.
Right.
It, that's an over improvement, which
Yeah.
isn't gonna bring, you know, too much bang for your buck.
what about solar panels? What's your thought
Oh, yeah.
process on solar panels? What does that add value, or what's your thought process on that?
We're starting to see a few more
Okay.
in the metro area, not a ton of them.
Okay.
They're uh, right now they're kind of an over improvement. There's
Okay.
no real. I haven't seen any real value bump
Right.
in a house that has a solar panel system compared to one that doesn't.
Hmm.
Um, I guess from a personal opinion, it's a little more difficult. I think the technology is getting better, but living where we live in Nebraska, you know,
Right.
it hails baseballs every 5 years. So I don't know. I don't know if you're gonna get your return on that investment.
You
It's
know,
just
I thought about maybe having a roofer come on board, because I'm like,
yeah,
or somebody who does solar panels, because I'm like, how in the world do those things handle? Do they have the Midwest version of solar panels where,
I
you
hope
know,
so. Yeah,
because I would think they would just take a beating.
yeah.
Um,
They're kinda like a pool,
yes.
where you can really waste $100,000 on a pool. It doesn't, and I hate to say that on
Yeah,
a live stream,
that's
but
okay. That's it. People need to hear it though.
so, yeah, if you love pools, go
Right,
get a pool. If you love to be energy efficient and to do that, if that's your thing, go for it and you got the money, but
right.
they're not, if you're trying to do it and enhance value, it's probably not a good, there's other things to do with the money.
Exactly, exactly. Okay, let's see here. James has a question. When appraising a home in a subdivision, do you consider what other houses are already sold for?
Oh yeah, yeah,
Oh,
absolutely. You know, um, typically we like to stay in the subdivision say
Yep.
it's a typical subdivision out here in the metro somewhere, um, that house we're gonna pull comps from that neighborhood and sales from that neighborhood. So, if your neighbor's house is pretty much like yours and it sold 2 months ago, we're gonna look at that sale.
Gotcha. What about a new construction neighborhood? When the new construction bumps up prices, do you ever have an issue where during that bump up phase when they've increased price that there'll be one or two that come in a little bit low? Does that ever happen or
It
tip?
does, it can.
Okay.
Volume builders love to do that, right, around
Yep.
here. So
Yep.
they'll increase their prices, which they've gotta do over time.
Yep.
But yeah, if you're looking at sales that are older, you know, it's hard to sometimes justify that bump up in price. But in a new subdivision or in a subdivision with typically new homes,
Hmm.
we're pulling sales from other subdivisions if because in a new construction appraisal, we
Hmm.
can't use all of the same builder of new homes. So,
Okay.
um, you know, that's a requirement through Fannie Mae
Okay.
and
I did not know
FHA
that.
too.
Okay.
So it just doesn't make sense. And I understand the logic behind it because
Right.
you don't want a builder dictating price, right?
Right. Yep.
Even though they do,
Right.
from an appraisal value standpoint, we go outside of the area to find a
Okay.
builder that's comparable or even a subdivision of
Gotcha.
that's
Okay.
comparable in sales to pull comparables.
Okay. Okay. All right. And then let's see. Clark says, if you lose your appraisal report after buying a house, can you go back to the appraiser to request a duplicate of it? That's a good question.
No, unfortunately not. So, we get that
Okay.
a lot, honestly,
Okay.
um, but our client is
Hmm.
the lender, and
Okay.
so, that appraiser-client relationship is pretty sacred, and
Hmm.
so they typically they own the appraisal essentially, as far as who gets it. So, we send it to them, they send it on
Okay.
to the borrower. I know through banking and your fees, they pay for it.
Right.
I get this every time. "Well, I paid for it. I want my
Right.
appraisal." Well,
Yeah.
the homeowner isn't our client, the lender is, so if you lose it, you have to go back to them, which is a
Gotcha.
pain. I
Right.
understand it because it's all electronic now,
Yep.
um, but typically, they can just email you another one, but
Gotcha. Okay.
unfortunately, we can't just send it.
Okay. And Aunt Zag says, does the appraiser look at the contract price?
Oh, yeah. Yeah, so if a house sells, an engagement letter in from the lender. We get
Okay.
the engagement letter along with a copy of the contract, the final contract. So, yep, we absolutely
With
look at the price.
with all the addendums,
With
the whole shooting match, correct?
We're supposed to have all the addendums. A lot of times they leave some out, so that
Yeah.
so we have to go back and,
Gotcha. Okay.
typically, you
Yep.
know
Yep. And that
but,
that
yep,
can make
we get
that can
all of the addendums and all of that, so
all right, let's see here. Bob says this might be the secrets to the Queen's jewels from your perspective. Was wondering if radon elimination systems are a plus, add value, or a minus, decrease value for appraised homes. Good question.
well, Bob, I've never adjusted for a radon system.
Okay.
You know, here in the metro,
We have high
I mean,
radon. Yeah.
radon is everywhere,
Yep.
so, um, at least most modern homes you go into have a radon reduction system.
Hmm.
The older ones typically don't, but
Yep.
they're more and more it's happening because
It's
that's just part of the transaction now. People test for it, so,
yep. Yep. Yep.
yeah.
Okay. All right. And then let's see. Let's talk a bit about FHA and VA appraisals. Okay.
Okay.
What are some of the most common things you see or that get called out from the on an appraisal on an FHA? Number one, do they have the same criteria? Do they have the same things they call out, or does FHA call out something a little bit different versus VA?
Well, I don't do VA appraisals, but
Okay,
they do have their own set of criteria.
gotcha.
Um,
Okay,
So yeah, but FHA do quite a few of those. The
Hmm.
biggest issues that we see are peeling paint.
Yep.
So, prior to 1978, if you have peeling paint, it could be lead based. They
Yep.
don't like that at all. They want that
Right.
remediated
Yep.
and not just scraped off onto the ground. They want that taken away and repainted. Um, uh, After 1978, even peeling paint's a problem after that. Say you have a modern home, it's got some peeling paint. Uh, that could be a water penetration issue, could damage siding. Basically, what FHA looks for is safety, soundness, and structural integrity.
Okay.
So, um, if you put your safety, soundness, and structural integrity hat on and walk through your house and you see peeling paint, handrails are another thing.
Oh yeah.
You know,
Yep.
um, frayed wires,
Okay.
missing face plates, that sort of thing. Uh, we don't typically see a lot of bowing walls in the foundation, but it does happen typically, or occasionally we can see sometimes in older parts of the city or even in uh, council bluffs where the water table is a little different than here. um,
Okay.
those old block walls can be bowing due to
Yep.
hydrostatic pressure, so
Yep.
things of that nature that have to be looked at. um, as some of the things that are just odd that they don't care about is like floor covering, right?
Okay. Okay.
If it's frayed and nasty, that's fine. Uh,
Okay.
you know, uh, Kitchen appliances, if they work, great. If they
Okay.
don't, if they add value, then they need to work. If they don't,
Right.
well, whatever. They don't care if you can
Gotcha.
wash the dishes or cook. But the water has to be on when we do an appraisal, uh,
Okay.
FHA appraisal. So we have to test water, we have to test electricity, that sort of thing. So
Now, what about tripping hazards? What is there any, what's the standard on that, or what do you see with that?
it's a bit of a judgment call. So
Okay.
if it's really egregious,
Gotcha.
then we'll call for the concrete to be fixed,
Okay.
or if there's, say you're walking up the steps to the stoop or the front
Mhm.
porch and it's really sunk and it needs to be mud jacked, that'll be called for too. You know,
Okay.
uh, Basically, FHA will insure any home if it has $5,000 worth of repairs or less. So
Okay.
call for those repairs are 5,000 or less, they're gonna insure that house. If it's more than that, then it's a no-go. They usually but there's other avenues they can, a 203K loan or whatever.
Okay. Okay. What about investment properties? What is the process like for, you know, um, a multifamily appraisal? Tell us, share with us a little bit about the insight that goes into that, or how does the process differ, or
Sure.
that's got to be challenging, or I would think that'd be a little tougher.
Yeah, it's more interesting because,
Okay.
dealing with tenants anytime is just it's a hoot. It's
I know
just
all
a
about
hoot.
that.
Yeah.
Yeah.
So, it's never a dull moment with a
Okay.
multifamily, that is for sure. So,
Okay.
but as far as the appraisal process goes, it's fairly similar.
Okay.
We get the engagement letter from the lender, we look for, the scope of work
Mhm.
things, we do our initial research on the property, and then, um, the thing that differs the most is the income approach to value. So,
Okay.
typically on a normal house, we do look at the income approach, but the majority of the value is based on the sales comparison approach.
Okay.
And in a new construction, a newer home, you'll get a cost approach in there too. But in an income producing property, you're going to look at the value or the income approach, which we're going to find comparable sales as far or comparable rentals in the
Okay.
area or similar multifamily units, and that's also a big one. So gross rent multipliers
Mhm.
uh, are play a key role in valuing a multifamily.
Gotcha. Okay. And then let's see. Let's see. Ben from Relocate to Omaha. He goes, I always wonder if the appraisal considers the contract price as well. And we
Oh
got
yeah.
the answer.
Hmm.
Absolutely. Yep. Yep. And then um, what should a seller do to prepare for the appraisal? Is there anything that a seller can do on their end if they're going to have their home appraised? We kind of talked about the list of updates and
Sure.
that sort of thing. Is there anything else that from Nate that you can see on your end that would help on their end, on your end?
Clean.
Okay.
No, so when we do our initial research, when I do, I look at the MLS listing,
Okay.
if it's a sale, and
Yep.
those photos are pristine, right? And then the appraiser gets in there and it looks like, a tornado went through. And we have to take photos, right?
Right.
Because the lender looks at those. We take photos of every room, the
Okay.
outside, everything. So, you know,
Gotcha.
and that shocks people more times than not. Like, oh, I didn't know you had to take photos. So sorry.
that's 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 a great point. So
Yeah.
okay. Um, what's what's kind of the craziest? I don't, we,
Oh,
we got a family show here, but what's like
yeah.
kind of like
Oh, yeah. No.
what's the craziest thing that you've seen on an appraisal, or what during the what's the kind of the what's kind of something that's a couple of things that kind of stand out that has occurred that you would like to share or can share?
Oh my. Yeah, it's never a dull moment, Some of the most memorables are, walking into a hoarder's house, which is sad,
Right, right,
um, because you just gotta start moving stuff to look at walls and flooring, and that can be really difficult.
right.
Um, other instances of, being I've been met at the door with guns,
Wow, that yeah,
knives,
right.
going into certain properties and, there'll be a vagrant or a homeless person in there, and you surprise them. You
Right.
walk you you go into, a house that you think is they know that you think they know you're coming, and you open it with the MLS key, and there's, a half naked guy sleeping on the bed, you know,
Yeah.
it's like, "Oh, dog bites. I've been bitten by dogs."
Oh boy, yeah, that's yeah. Okay.
I don't know. Trying to measure a house in thigh deep snow, I mean, it's just never a dull moment.
Okay. Clark has another question here. It's always interesting that an appraisal value is typically higher than the tax assessor appraised value. Why is that?
Well, because the tax assessor uses a different approach than we do. Really, they base their valuation on a mass appraisal system.
Mhm.
So they basically go through the neighborhood and they find a price per square foot essentially, and they kind of blanket the area with that price per square foot. They do a little bit of nuance on your with whether you have amenities, garage count, that sort of thing. But we look at each individual comparable sale that we can in the neighborhood and try to drill down to your house. The and part of that is the tax assessor never wants to be high. Creates more work for them, even though, every time they send out a statement and it's people think it's high, it's
Right,
a problem for them.
right.
So they try to be I think by law in Nebraska, they have to be within what I think 95% of
Yeah,
value,
90,
right?
I heard something about 92 or something like
Yeah,
that. Or
something like
somehow
that.
the number
Yep.
92 stays in my head. I'm not sure about that, but
Yeah.
it might be 95. But um, what we kind of touched upon this earlier. What are some upgrades that don't add much value in an appraisal, even though buyers love them? We kind of talked a little bit about pools, but are there any other upgrades or anything like that that you see?
Oh my. Yeah, it's basically based on cost. So if you over improve your house,
Mhm.
you're not going to get the value back out of it.
Right.
Um, there's a lot of information out in the world, whether it's those home improvement shows and that sort of thing. But
Mhm.
um, if you're going to flip properties, you know this. you have to buy it right so you can make a profit.
Right.
You
Yes.
know,
Yes.
buying a house at the top of the market and then starting to put a bunch of improvements in it, you're not gonna get out what you paid into
Right.
improvements,
Yeah.
right? But yeah, I think here in it's all based on location, right?
Mhm.
It's the type of house. Don't throw a ton of money into a house that you're going to over improve the area. So if you're the
Right.
highest price house in the subdivision, that's
Yeah.
problematic, right?
Yeah. No, that's yeah. That I've seen that, and I've had some tough conversations with sellers back in the day in 2008 when when sometimes it's kind of a that's not fun
Yeah.
when they
Uh,
um,
Not just pools, but if you look at a lot of people will expand their square footage. You
okay.
know, they'll spend a gob of money putting an addition on, right?
Yes. Yep.
And that can work out, but a lot of times it doesn't because they're putting,
Right.
just an addition costs significantly more than just moving to a new area with the type of
Right.
house you want. But I understand why people get really attached to their homes. It's so emotionally and subjectively, driven.
Yep.
So I totally get it. But if you're looking at it objectively and unemotionally, additions typically aren't gonna
Yeah.
bring
And
your value up.
it seemed like in the mid 80s there was a big, do you see that as well? It seemed like back in the
Mhm.
mid 80s for some
Oh,
reason
yeah,
additions were like the big thing.
they
You go
were. Yeah.
and hey, Jen stopped by. Hey, Jen Sylvester is another friend. She's from Massachusetts. She has a sellers channel
All right.
that specializes with helping sellers, puts out some great comments, great content. So check out her channel as well as Clark. And then let's see here. Um, let's see here. MHO8 stopping by. Oh, wait. That's the guy next door. Did he? I don't know what that. They might have been different. Oh, that's what the guy next door did. He was host. Okay,
Yeah.
maybe he's talking about an addition. Okay, okay,
Or 3 season rooms too, you know? Those
right.
are peddled a lot, and they're very nice, don't get me
Oh, they're
wrong.
nice.
They're
Yeah,
great, but they're not square footage. They're
right.
even if they have a heating and cooling in them, because
Gotcha.
typically they're very nice, and we do adjust for them, but they're not typically counted as gross living area of the house, and they can be really expensive.
Okay, and then let's see here. Um, let's see. Clark says, "How far out will you go to get comps if you can't find any in the subdivision or neighborhood within the last few months?"
I go as far as I need to. You
Gotcha.
know, that sort of thing. You gotta find comparables, right? And
Yep.
so, basically what we touched on earlier, uh, you try to find a competing neighborhood that has
Hmm.
similar homes with similar economics, similar, sources of amenities that they're close to, uh, if you can. If you can't, and you can find something similar to the house, but the neighborhood's different, you can adjust for those things.
Gotcha. What about we have a lot of historic homes,
Mhm.
in the Blackstone district, right in that, the Jocelyn area, right around in there, Gold Coast. What's some of the challenges with appraising a home like that? Because I was in one a few days ago and they had a big old boiler downstairs.
Oh,
It's
yeah.
really super cool, but it's like, and then you
Mhm.
see all the ductwork taped in asbestos and stuff. And I'm
Oh,
like,
yeah.
that looks, that looks interesting. But what's some of from your standpoint, on a historic home like that, what's some things you see with that, or how do you adjust for, some of that sort of thing? What's your thought process on that?
Yeah, great question. It's very difficult, especially in older, large historic homes. Uh, Again, you've got to find comparable sales. If there are none, you find the best you can and then make those adjustments because renovating those, just the cost alone to redo an HVAC system in
Uh,
one of those Gold Coast mansions
uh,
it's just it's astronomical, right? And a
yeah.
lot of times, you look at the quality of construction too,
Mhm.
where back in the day, all of the woodwork and the millwork they had, I mean, they just
Right.
don't do that anymore because it's
Right.
cost prohibitive. Um, yeah, it's very, very difficult to appraise those. You just have to do a lot of adjustments on
Okay.
quality, location,
Gotcha.
condition,
Okay.
that sort of thing.
Okay. Okay. And then let's see, MHO. Yep, he had 3 bedrooms, a new bath, kitchen. Now he has a dead tree on his roof, crushing the fence.
Uh, Hope he has insurance.
that's
Hmm,
that's a whole nother live stream insurance.
that's right.
Okay. Let's see here. Let's see. Talk about. Um, I don't think a lot of people fully understand all of the training and certifications and the hours that go into being appraisal. Talk about that, or what's because it's a lot. It's very intense. And talk a little bit about that, Nate, if you don't mind.
Sure. So basically, I'm a certified residential appraiser.
Hmm.
To do that, through each individual state has their own appraiser board.
Okay.
Nebraska's um, has theirs. I'm also credentialed in Iowa too.
Hmm.
So it's all dictated on the national level by the Appraisal Qualifications Board, which is a nonprofit organization run by the Appraisal Foundation, which is sanctioned by Congress through
Okay.
the Financial Institution Recovery and Reform Act of 1989. I
Okay.
messed that up, FIREA. But anyway, uh, that's all came out of the savings loan debacle back in the 80s. We all, been
Yep.
around that long. That's where that came from. But anyway, appraisers have to be credentialed uh, through those standards, and to be what I am, basically, there's college degree component, bachelor's
Hmm.
degree. If you don't have a bachelor's degree, there's certain amount of college credits you have to have based on
Okay.
certain business courses. And then on top of that, there's 200 more hours of specialty appraising classes that you have to have.
Wow. Okay.
Um, and those are all based on theory on sales comparison approach,
Hmm.
income approach, cost approach, uniform standards of professional appraisal practice, which we have to follow. That's kind of our law and guidebook on how to
Okay.
do everything we do. Statistics and modeling, finance, that sort of thing also goes into it. And then once you have those, you have to have basically 1,500 hours
Wow.
over a 2-year period with under another credentialed appraiser, a
Okay.
certified appraiser, whether it's residentially certified or generally certified. Um,
Gosh.
my credential level allows
Hmm.
me to do 1 to 4 family
Okay.
residential property, no matter the complexity.
Wow.
A
Okay. Terrific.
certified general can do any commercial, residential, no matter the complexity. There is
Wow.
another license level in Nebraska. It's called the licensed
Hmm.
appraiser, and they can do appraisals 1 to 4 family, non-complex up to $1 million, and
Okay.
complex properties 250,000 and under. So
Gotcha.
yeah,
Okay. Wow.
that's a lot of
Lot of yeah, a lot of schooling and a lot
yeah.
of hours on working there. What? How about technology? How has technology changed things in your world?
It's been quickly growing.
Hmm.
AI is coming into play now. That hasn't really
Yep.
hit us too much yet. We're
Okay.
still trying to figure that out as a group.
Yep.
But just over the years, it's been great with digital cameras, and
Right.
all we do is basically online. Um,
Yep.
you know, uh, we have disto laser measurers that we can get really accurate measurements of houses. What's coming into play now is an app called Cubicasa. A lot of
Okay.
agents are using that for 3D floor plans, but it also does measurements through your LiDAR system on your phone, which is kind of cool. Um,
Okay. Wow.
but yeah, a lot of appraisers use they don't even use a pencil and paper anymore. They use tablets or their phones to go out and do all the inspections, and that uploads automatically onto the cloud or your laptop
Yep.
or whatever you're using. So it makes it easier. It's increased the amount of time we can do research.
Right.
doing as much data entry as we
Hmm.
were,
Yep.
because a lot of that can be transferred over into the appraisals. So, technology's helped quite a bit shorten the amount of time that we sit there and do data entry essentially, but
Right.
we still have a ton of research.
Oh, yeah. Bob has another question here. If I needed to find an appraiser or shopping around for one, what makes one stand out from the others that I should be looking for? Is there any Nebraska association that I can go to for help?
So, that's a great question. Used to be you'd go to the yellow pages, kind of thumb through there, right? But
Right.
I'm not sure if there's any sort of things that stand out. There's a lot of credentialing agencies just above and beyond what the state of
Mhm.
Nebraska does, whether that's the Appraisal Institute or uh, the Association of Farm Managers and Rural Appraisers. There's um, organizations like that that do um, give specialty credentialing to appraisers. So you can go onto their websites. The state of Nebraska also has, um, you can search by county for each appraiser.
Okay.
So,
Okay.
you know, a lot of times people do that and they'll just go
Gotcha.
down the list of names and
Yeah.
make phone calls if you need,
All
you
right.
know.
Clark has another question. Do you do appraisals for USDA? And if so, do you look for appraising when those types of property utilizing a USDA loan?
Absolutely do USDA loans.
Okay.
Not in the metro, obviously, it's too big,
Right.
but you get
Yep.
out into the little towns, there's a lot of USDA loans. USDA follows FHA exactly. So
Gotcha.
their
Okay.
property standards, FHA's property standards are USDA's property standards.
Okay.
So
Good to know. I didn't know
ceiling
that. All
paint,
right.
handrails,
Yep.
grade wires, the whole thing. So yeah,
Well, and if someone wanted to get a hold of you, one easy way to do that is to go to your website. Is that not
yeah,
correct?
that looks great to me. Absolutely.
Well, Bob teed that one up for us.
Yeah,
Yeah. So,
thanks, Bob.
all right. Well, Nate, I tell you what, I really enjoyed this evening. I got a lot out of it. You shared a lot of great information, a lot of great questions in the chat this evening. Anything else you want to share before we call it a night that you think people should know, or anything that we didn't cover? Because I think we covered about everything. But is there anything else we that you want to put out there that it's up to you?
Well, uh, don't be afraid to ask questions if you're an agent. It's not scary. You can call me. I'm
Great,
I'll try to explain it to the best of my abilities. I'll tell you what I can tell you,
right.
value-related issues, are tricky to discuss. We can't
Mhm.
really discuss the results of an appraisal because
Right.
our client is the bank, so or
Gotcha.
the lender. But yeah, be more than happy to ask questions or answer questions, and, that's mainly the main thing. We don't get a lot of calls unless there's a problem, so
Right.
which is fine. But and the more information, the better. Like I said, I really enjoy getting, those packets from agents that
Right.
show their thought process on how they came up with the list price.
Gotcha. All right. Great takeaway. And then Bob has thank you again for another excellent episode, Dave, and thanks, Nate, for the great info. All right,
Alright,
terrific. Well, I tell you what, Nate. Well, we're gonna call it a day. I really
alright.
appreciate you showing up for tonight's
Yeah,
program. And again, if they want to reach out to you, they can go to your website and order an appraisal if they want to do so.
sounds good. Well,
All
thank you,
right,
David. Really appreciate your
you
time.
betcha, you betcha. And I'll see you. I'll talk to you in a couple seconds here. All
Alright,
right.
thanks.
All right, everybody. Well, I tell you what, great information tonight. A lot of great questions. Thanks for everybody for who's participated in the chat tonight. That was fantastic. Some great questions. It was great seeing some of my friends pop by. So anyway, next week we have another great. We're going to have another great program. I'm going to have a property manager for next week. So I'm excited about that. So anyway, do me a favor and give the stream a thumbs up and subscribe to the channel if you don't mind. And you guys make it a great day, and we'll talk to you next week. Bye bye.